Hello to the hockey family. Tyson Strachan here. We're going to discuss NIL contracts at the moment in time that we're at. Really could be referred to as the Wild Wild West. As always, I'm joined by my College D partner, the founder of our firm, Johann Kroll. Similar to the last webinar that we did on the deferred comp contracts, this was a topic we just didn't plan on spending a lot of time on, but it's a topic that more and more guys were asking about. Agents, young players, and we thought it was important to get into it.
Yeah, definitely. And yeah, Strax, like you mentioned, a lot of opportunities for players here, which is great, but it also comes with maybe some unfamiliar challenges. And we just wanted to highlight some of those and make sure everyone had a decent understanding of things going on. And yeah, obviously some cross-border tax pieces, also some immigration issues potentially, which we'll touch on. And so a lot to cover. And we always read this disclaimer, but I would say maybe this disclaimer should maybe apply even more to this topic than others, just because this NIL landscape is changing so rapidly, like each day, each week and month. And so we sit here recording this on August 14th, 2025, and things could change next week. So just really important to always make sure you're consulting with your own financial, tax, and legal representation. And this webinar and the things we're going to be discussing over NIL, that this of course is just meant to be educational and really just trying to help the hockey family better understand what's going on here.
Yeah, so next slide here is obviously just the goals for today, what we want to go over. What is NIL? Why it matters more than you think. Planning NIL for U.S. hockey players, also planning NIL for Canadian hockey players. And then at the end, we'll jump into just some action items to be cognizant of. So on this next one here, I'm not going to spend a lot of time here, as most of you at this point know what NIL is. But NIL refers to name, image, and likeness. The term mostly applies to college athletics to describe an athlete's ability to earn money from their personal brand. It's also the amount of NIL deals in hockey has increased considerably over the past year. And then, jumping in here, just Yogi, tell me why this matters more than a lot of people think.
Yeah, so where this begins to start to get complex from a financial planning standpoint is most universities seem to be doing everything they can to avoid W-2ing athletes. Okay, so W-2ing is, as some of you I'm sure know, like a W-2, you get a paycheck and there's a tax withholding. You can see it all on a pay stub. It's clean. You can be deferring into 401ks and things. And but when you W-2 someone, that implies that they are an employee, right? So they're an employee, and if someone's an employee, it adds additional responsibilities, and a lot of times you have to provide additional benefits. And for a number of reasons outside of the scope of today's call, like universities do not want to W-2 athletes for NIL. Okay, so what's happening is most players are being issued 1099s or nothing at all, I should point out. All right, so most players are being issued 1099s, which puts the entire responsibility on the player. Okay, so not the university. Like the entire responsibility gets put on the player for tax reporting, deductions, payments, wealth strategy. And as you can imagine, if you're not well educated, there are some potential pitfalls that can arise.
Yeah, so I mean, some of these pitfalls include, penalties for late or incorrect filings, unexpected tax bills, missed funding opportunities just for tax advantaged accounts. And then obviously, as Yogi mentioned earlier, there's also some immigration issues.
Yeah, so let's just quickly touch on the first one there. So penalties for late or incorrect filings. Again, because the entire responsibility is on the player. Remember, because these are 1099s and you're not having any taxes withheld, right? So whether you're in the U.S. or Canada, like it's going to be your responsibility to ensure you are reporting that income. Otherwise, yeah, whether it's the IRS or the CRA, you could get yourself in one that you don't want to find yourself in. So what we're going to touch on a number of these other pieces here in the coming slides as well.
Yeah. So we're going to start off here just talking about U.S. players, as it's a little bit more simple and straightforward at the moment. So planning for U.S. hockey players, it's important to ensure that your tax planning and preparation is done by someone with hockey-specific knowledge. Just at this stage, this is going to be the first time that many kids ever have anything to do with taxes, right? So they might look to their parents to use their accounts, etc. But a lot of those accountants just don't understand the complexities involved with the hockey, signing bonuses, etc. If you're in a position now that you're signing an NIL deal, that's a pretty good indicator that you're going to, at some point sign at least a professional contract, right? So handling those signing bonuses, etc. There are a lot of great CPAs that we work with that really this is their focus. They understand hockey world inside and out, and we find that it's important to work with those. So just stopping right there before we move on. Obviously, like our team, like we said, we work with a lot of these great CPAs. If you're looking for one, please reach out to us because we'd be happy to put you in touch with, the right person for your situation.
Yeah, and one of those reasons, like Stracks mentioned, if you are a player that has a decent chance of signing an NHL contract and you're receiving NIL, you kind of got to start planning like a pro today, right? Because there's certain expenses that you're going to be able to deduct. Okay, so a really important point here is, we're kind of going through the differences of a W-2 versus a 1099. So once you sign a contract, an NHL contract, let's say, and you at that point you're going to become an employee of the NHL team. Okay, so at some point down the road you're going to be receiving a W-2, right? And at that point, as most of you are aware, you can't deduct agent fees and other expense like you used to be able to, call it about 7-8 years ago, but now you can't. But what's interesting is before you are technically an employee of an NHL club, and if you are fortunate as a younger kid to be able to sign one of these NIL deals, and because you're a 1099, it's what's referred to as an independent contractor. The rules they work a little different, right? Because if you're an independent contractor, technically that means you're self-employed. So you kind of find yourself in this different set of rules, where at this point, because you're self-employed and technically it's your own business, your name, image, likeness. You can deduct legitimate expenses if you do it the right way, such as agent fees. There's certain social media accounts that you could deduct if there's fees involved. There are other expenses if you're not reimbursed for certain things. You'll be able to deduct those as well on a Schedule C in the U.S. So certainly you want to surround yourself with a tax team, a CPA that understands the way these work for NIL to ensure you're getting all the deductions you can get.
And next planning point here is just budgeting for your tax bill. Obviously, Johann touched on it earlier. Everything is going to fall on the player in this situation. You're not in that W-2. So, planning for your federal, state, that self-employment tax, that's 15.3% down here in the States. Possibility that you might be, be helpful to be making quarterly estimated payments.
Yeah. All right. And then there's some other things you can do as well. So in the U.S., again, while you're on a 1099 and you're quote unquote self-employed, the use of a vehicle like a SEP IRA to help shelter income and receive the deduction can make a ton of sense. And then, in addition to that, you can, in the States, you can actually also use a Roth IRA alongside of that many times. Okay. So, and a common misconception we see as well, like, so some people confuse the rules the way like a Roth IRA works with a traditional IRA, okay, where where it's between a Roth and a traditional, as if you're younger than 50, you can't contribute more than $7,000 into some combination of those two. But when you're self-employed, it's a totally separate set of rules for how much you can contribute to a SEP. And then you have like a separate Roth that you could potentially contribute $7,000 to as well. Yeah, as we stand here in 2025.
And just one question, comment again that we've just heard from agents and a lot of these younger guys is just, I'm 18 years old, or my player's 18 years old. Is it really that big a deal if he misses one funding year of those tax advantaged accounts?
Yeah, and we would say yes. We would say yes. And I created just a quick hypothetical example just to show, if you're 18 years old and you're able to even if it's just a one-time investment in a tax-deferred, tax-free account, how far that can go throughout your life. And so again, just let's say now this would be a pretty nice NIL deal, okay? But let's just say you're somewhere in the ballpark of, let's just say it's like a $60,000 NIL deal. So a really nice one, all right? And so if you're receiving 60,000 of NIL, all right, again, so let's say you're able to deduct a handful of expenses to bring kind of your net income down to 50, all right? And then this is an oversimplification, but the way a SEP IRA works is you can roughly contribute 20% of your net income into the SEP. So let's say you start at 60, you deduct some expenses, now you're down to 50,000 of income. Well, that would allow you to put roughly $10,000 into a SEP IRA. And then, like I mentioned, you as an 18-year-old in the States, you'd also be able to do $7,000 into a Roth. All right. So if you're this 18-year-old, and you have the ability to start off with just a one-time investment, $17,000 invested at age 18, well, let's just use a reasonable 8% annual return. That's not outrageous. I feel like that's pretty realistic. So 17,000 invested at age 18, growing at 8% annual return. Now, keep in mind, this is without adding a single dollar between age 18 and later in life. So I have this ending at age 65. So that's going to compound. That 17,000 grows into $632,000 at age 65. Just that one-time investment at age 18. Regardless of how your hockey career ends up playing out, right? And obviously, we hope all the young kids have a really nice career and they can play a bunch of years. But if this is the single investment you make and you don't contribute another dollar, the rest of your life, just as 17 turns into over $500,000 by age 65, which is just incredible compounding. But we just thought it was important to illustrate just the importance of starting early and funding these accounts. I mean, maybe you can't do 17,000. Maybe that number's 3,000, 4,000, 5,000, right? We ran the numbers yesterday. Just a 7,000. So say you can't do the SEP, but you can do the 7,000 into the Roth. Same future value compounding to age 65. 7,000 turns into roughly $260,000 down the road. So really, really important concept for players, their parents and agents alike, to have the understanding why we get so passionate about like starting young, because it's just the time is the biggest factor in investment success long term.
Yep. So then we're going to jump into, talking about planning for the Canadian hockey players. So it does differ a little bit here. So this is me, right? I came down from Canada on that F1 student visa, right? So the situations that come up there, you're likely not a U.S. tax resident, but you're earning U.S. sourced income. So that means that you need to report it on your Canadian tax return as worldwide income. Possibility that you might qualify for some foreign tax credits here. That's a small possibility. Just depending at, that's everything getting reported correctly.
Yeah, and even Strax, let me jump in too, because remember, like what
Yeah,
we're hearing from some CPAs on this, like you might not even be given a 1099,
no,
right? If you're Canadian, right? And we just think, regardless, it's best to report it.
yeah, yeah. No, that's very true. Also there's immigration and visa hurdles, as we have touched on a couple points here. But so again, that's the F1 student visa. That's what, every international student comes into the U.S. on. That particular student visa, has precise language in it that does not allow those international students to work in the United States. There's a couple very small exceptions. There's a process going on right now in Congress where they're working to maybe change the wording of this visa to work through this NIL deal. But as it stands right now, that F1 student visa does not allow, international students to work and earn money in the States. So it's important to realize that just like some NIL deals that might be fine for your U.S. teammates, just might not be okay for you. So while we hope that the playing field will be leveled soon, in the meantime, it's essential just protect your eligibility, your income, and your future by just making sure that you follow these rules at the time, right?
Yeah, yeah, great stuff. And then lastly, yeah, very similar to what we just went over for some consideration for U.S. players, like yeah, for Canadian guys, don't forget about those tax advantaged vehicles as well. And yeah, they work a little bit differently, as I'm sure some of you are aware. But like a TFSA, yeah, same contribution limit as like a Roth, so 7,000 there, and then our RSPs don't work exactly like a SEP, just because you need to wait a year basically so your NIL income, like this year, yeah, the CRA would let you know yeah, your contribution amount for the following year that potentially you could put in. Yeah, so maybe that's 10,000 as well, right? Depending on the way things shake out. But again, just very, very important to work with your CPA, other professionals to, yeah, you don't want to be missing out on that opportunity cost of tax advantaged accounts long term.
And then just finishing here, as we said, just the bottom line kind of this and some action items that you can take away today. Um, NIL, it's a great opportunity for some, but as we've kind of pointed out throughout here, there are some challenges that come along with it, challenges that people are working through. It's important to proactively just work closely with your agent, CPA, wealth team, as Johann just mentioned. You want to stay ahead of rule changes so you don't get blindsided. Again, be above board, do things correctly, no shortcuts.
Yeah, yeah. Just we've seen kind of some situations where, yeah, I'm not certain some players are handling this the right way, and yeah, just I don't think it's worth taking shortcuts. Like the last thing a player wants is 2 or 3 years from now, and yeah, they're playing in the NHL, and all of a sudden you have the CRA or the IRS chasing you down in the middle of the season. Like you're not going to want that distraction. Like at this stage of the game, like yes, take advantage of the opportunity that's in front of you, but do it the right way.
Yep. last couple of things here, important to manage and plan for those cross-border taxation issues, savings, etc. And then again, just funding the appropriate investment accounts given your status. So whether that be a SEP IRA, Roth IRA, both, TFSA, RRSPs, as Johann showed a couple slides ago, just how important and powerful that starting early can be, right?
Yeah, it's so fun to just educate. We work with so many young guys and their families. Just really fun just to kind of educate them on a slide like that. Just how powerful that compounding can be long term. So
Yep.
we certainly appreciate everyone taking a little bit of time here just to kind of go over some of the basics. Again, work really closely with your teams, your CPAs, agents, wealth professionals. And yeah, our team, of course, would love to be a resource to you and your family if we're not already. You can send us an email, info@hockeywealth.com. You can also buzz us, telephone right there below. And obviously, the hockey season is right around the corner here, and I'm sure we will be seeing many of you on the road. We always like kind of getting out and watching games, and keeps us in the game, right, Strax? But wishing everyone a healthy and successful season, and we'll talk to you guys soon. Thanks so much.
Thanks, guys.